And so they have a higher stakes in avoiding things like chargebacks and fraud and things like that. And one
Hmm.
of the advantages that Bitcoin is at least done certain ways, it's final,
Hmm.
which matters more for certain types of payments than others. So I think that Bitcoin fits in multiple ways into this vision of the future.
Hey guys, welcome to Everyday Finance. Bitcoin's next big move, whether it rises to unprecedented highs or falls, depends on two macroeconomic forces: the intensifying US-China trade conflict and the growing instability in US Treasury markets. The cryptocurrency's 2025 trajectory is a high-stakes game shaped by global economic tension, and market observers are divided. Some optimists still believe Bitcoin will reach six figures and skyrocket, but others warn that without a large liquidity injection, such dreams may be unrealistic. Investment strategist Lyn Alden is cautiously optimistic. She predicts a move just above $100,000 for Bitcoin, but she thinks it could double in a year. Even that outlook has been dampened by recent global trade policy developments, particularly US-China tariff escalations. Alden emphasizes that a bond market breakdown is Bitcoin's biggest wildcard, not geopolitical tension. Treasury yields could spiral out of control, forcing the Federal Reserve to intervene with yield curve control, QE, or other emergency monetary accommodation. A policy shock could unleash a torrent of liquidity, driving Bitcoin demand as investors seek protection from currency debasement and central bank intervention. Bitcoin may grow more slowly if the Fed stabilizes bond markets and trade tensions. Bitcoin is no longer just a speculative asset. As a global financial barometer, it shows trust or fear in monetary systems. This year will show whether it is digital gold or just another asset class vulnerable to macroeconomic forces. Bitcoin may rise sharply in a liquidity crisis or geopolitical upheaval. Plan a methodical climb if order is maintained. Market dynamics, Fed policy, and international politics will determine whether Bitcoin becomes a true safe haven or remains tied to risk sentiment in 2025. Be prepared. This ride is far from over. Let's watch the video ahead.
So I do. I think so right now in the existing framework, gold is the primary neutral reserve asset that central banks already own. They already know how to buy. So that gets kind of the initial benefit. Bitcoin is the up and comer. So as long as it continues to stay decentralized and secure, I think it'll continue to grow in size. It has the benefit that it has its own settlement network attached to it. It's kind of the half the point. Whereas the reason gold can't kind of by itself be the best global reserve asset is because then you need this like layer of credit on top of it. Whereas Bitcoin can function on its own. In addition, when we've seen these other countries try to go around the dollar, they're always trying to build these like systems to interface with each other. So all these like closed systems, trying to figure out how to do cross-border trade. While there's this really powerful open source solution kind of staring them in the face. Now, it is understandable that they've not rushed to it because using the Bitcoin network means owning volatile Bitcoin. It's also still fairly small compared to the scale that the world would need for something like this. So there's some degree of career risk of being early, for example, but it is kind of reaching the scale where I think that countries will increasingly take it seriously. Um, and so both as a neutral reserve asset and as a global settlement network, that's very powerful. In addition, all the existing things already has. Basically, if you're in a place that's authoritarian, individuals can benefit from Bitcoin as well, rather than just countries at the sovereign level. So the kind of the full stack and down, I think is pretty powerful. And then in addition, we just talk about AI. It's hard for AI to get bank accounts. It's
Hmm.
easier for them to spin up a wallet. And so I think that it makes sense that Bitcoin is a powerful tool for AI agents in the future as well, microtransactions, things like that. In addition, there's also like a lot of kind of existing software when they face things like credit card fraud, where you pay for their services and then like cancel, get your money back. They didn't really lose much by giving you that service temporarily because it's a high margin business.
Hmm.
Whereas AI services are pretty hardware based. They actually incurred a cost.
Yeah.
And so they have a higher stakes in avoiding things like chargebacks and fraud and things like that. And one of
Hmm.
the advantages that Bitcoin is at least done certain ways, it's final. Um,
Hmm.
which matters more for certain types of payments than others. So I think that Bitcoin fits in multiple ways into this vision of the future.
The cryptocurrency market has stagnated, lacking the momentum or major catalysts needed to reignite a buying frenzy. Prices are range bound, investor excitement is low, and altcoin activity is slow. But a seismic shift may be happening. Binance, the global crypto exchange giant, recently announced a move that could change Bitcoin adoption. Binance CEO Richard Teng revealed that Binance is helping nations create Bitcoin reserve frameworks. Former President Donald Trump's controversial push to accumulate digital assets prompted this behind the scenes move. Other governments are now exploring similar paths. Countries stockpiling Bitcoin could have huge geopolitical repercussions, making Bitcoin a core asset in sovereign financial strategy rather than just a hedge for institutions or individuals. This comes as the crypto market seems listless, with no clear triggers to send prices up or down. Bitcoin remains dominant over altcoins despite stagnation. Many analysts expect its market cap share to remain strong into the future. Bitcoin's resilience shows its maturity and reputation as the crypto space's most stable asset, becoming the digital equivalent of gold in uncertain times. Investors await the next spark, geopolitical, monetary, or technological. But will Bitcoin be the catalyst that reignites the market? Or will something more unexpected shine? Crypto's nature is unpredictable, and state-level Bitcoin accumulation could usher in a new era for digital assets. The next market phase may not be a price chart or altcoin breakout, but geopolitical shifts that rewrite Bitcoin's role in global finance. Watch more clips.
I'd have to remember exactly where we started the year. I know the ballpark where we started the year. My guess is that we end up higher at the end of the year than we are now, at least. Um, there's a lot of variables that could affect that. So I think that most days where you have a big down day in markets is probably not going to be a good day for Bitcoin, just because most pools of capital treat it as a risk-on asset. It's still small, it's still volatile, um, and a lot of times, especially because it trades 24/7, if people are worried about how things are going to open on Monday, some pools of capital can sell their Bitcoin on a Sunday, and prepare, right? So the 24/7 can sometimes add to its volatile pricing, especially when TradFi markets are freaking out. Because we're talking about like a sub $2 trillion network compared to this like multi-hundred
Yeah.
trillion dollar global behemoth of interconnected finance and leverage. So Bitcoin, I think, will get shoved around by volatility. As this kind of settles a little bit, if you do get ongoing capital outflows of the U.S., that actually could be good for Bitcoin. So sometimes people ask, what could make Bitcoin more meaningfully disconnect from the Nasdaq? Well, one is anything that hurts Nasdaq margins, but that does not hurt global liquidity,
Hmm.
which should generally be somewhat supportive of Bitcoin, minus certain particularly volatile periods. But then it more structurally impairs the Nasdaq, the S&P 500. We saw similar to this in the closest period to maybe look at or study is the 2003 to 2007 period. Um, that was the prior weaker dollar cycle. There wasn't this kind of like mass excess of capital, but there was around the margins. Capital went to emerging markets, capital went to commodities, capital went to gold, capital went to these other assets. And so US stocks were not really the place to be, and a lot of other assets were. And I think if we encounter like a 5-year period like that again, that could be a period where Bitcoin does pretty well, even as the stock market, the US stock market, doesn't do particularly well. So that's kind of how I view it. I think volatile but favorable. I Short answer is I think longer term, yeah. I think that Bitcoiners got very attached to cycles, and I think especially as the asset gets larger, those cycles become less clear. Anytime a lot of market participants think they know how something works is when it tends to change. So
Yeah.
just when all like TradFi market participants were like, well, bonds always go up when stocks go down. As soon as they all know
Mhm.
that, that's when it stops happening.
Yeah.
Because it's already fully positioned for, and then it's not going to happen. Um, and so I think that basically everyone's seen the Bitcoin cycle so many times. They expect there to be a cycle, and cycles can change. And so I think it's less about the halving cycle. It's more about the liquidity cycle, but liquidity is complex in this environment. Um, we've at least taken off some tail risks of politics for the next few years. So Bitcoin has always had kind of this like embedded
Right.
probability of like, what if the U.S. takes its gloves off and just goes after Bitcoin really hard? Right?
Mhm.
Because I would certainly, tell every major financial institution in the U.S. that you can't custody your own Bitcoin.
Mhm.
Um, kind of go after it. That's at least off the table for a while. So I think that a lot
Mhm.
of the fundamentals look pretty good at the current time. So I expect pretty good performance over the next year or two. But it is subject to not having like a 30% market crash or things like that that could, temporarily push us lower that we'd have to then rebuild from. The higher you go, the more I'd call it out of reach. I'm always hesitant to say Bitcoin can't do something. Like when we were at I was at the New York Stock Exchange with it was Michael Green, Nick Carter, and another, and we were asked like, could Bitcoin reach 100,000 by the end of the year? And my view, and it was nowhere near
This
at the
was
time.
last year?
Yeah, this was last year. This is 2024. And I think it was at the time of the conference, it was like probably the upper 60s,
Uh-huh.
60 some thousand. And I was like, well, it wouldn't be my base case, but Bitcoin can do Bitcoin things.
Mhm.
And it did. It touched 100K by in a fairly short period of time. It jumped from the
Yeah.
60s all the way up to 100K. So I don't really rule out Bitcoin ever doubling in a year. I mean, it's
Mhm.
Bitcoin. But I tend to have more conservative price predictions, which I think there's a good chance we can get back up above 100 this year. Um, you
Mm.
know, before all this kind of tariff kerfuffle, I would have,
Kerfuffle, yeah.
yeah, kerfuffle. I would have had a higher, I would have had probably a higher price target. Um, if I imagine a scenario that brings us to very high prices this calendar year, it would probably be because some massive liquidity unlock happened. Like, let's say
Mhm.
the U.S. bond market broke, the Fed came in and like basically did yield curve control or like, kind of QE that they don't really want to be doing,
Mhm.
or some sort of big treasury operation twist sort of thing. It would probably take something like that, combined with some sort of like de-escalation of tariffs. I never really rule out what Bitcoin's doing. I look at a couple of things. One is, I think liquidity is probably going to be somewhat favorable for the rest of the year. And two, if you look at certain valuation metrics, I like to look at the market cap to realized cap ratio, which is market capitalization compared to the
Yeah.
average on-chain cost basis. And this current consolidation has taken off a lot of the hype around it. So if you
Mhm.
look at the prior consolidation, so Bitcoin reached 73,000 in March 2024, um, that ratio got a little bit elevated. So it wasn't elevated to the point of like prior like multi-year tops, but it was a little bit heated. And so
Yeah.
after about a 7 month consolidation, it pretty much worked off all of that excessive valuation,
Mm.
that excessive hype, kind of allowed the market to consolidate. Then when it jumped to like, 108K, it kind of reached similar frothy levels. And so
Mm.
the fact that we've been consolidating for several months, not particularly surprising. I think we worked off a lot of that valuation already. So I think we're at a pretty strong foundation to at least start building from, especially once we get past maybe near-term stock market shocks and things like that.
Bitcoin's resilience amid macroeconomic pressures like Trump's tariffs and interest rate uncertainty signals a market shift. Bitcoin, once known for its wild price swings and retail-driven volatility, appears to be maturing into a resilient asset class anchored by institutional presence and strategic accumulation. Market shock absorbers in Bitcoin's new structure include spot Bitcoin ETFs and Michael Saylor's MicroStrategy, according to Bloomberg analyst Eric Balchunas. From over $2.4 billion in net inflows into Bitcoin ETFs this year to Saylor's 531,644 Bitcoin, institutional forces are soaking up supply during fear and uncertainty, protecting Bitcoin from other financial assets. Bitcoin has consistently remained above its November 2023 all-time high of $73,679, surprising even its harshest critics. Equity markets struggle under macroeconomic crosscurrents. newfound strength can be explained by Lyn Alden's macroeconomic framework as a weakening dollar and capital rotation, reminiscent of the 2003 to 2007 commodities supercycle plague the financial system. Bitcoin is becoming a neutral reserve asset. Gold's role in economic uncertainty is reflected in ETF investors' long-term outlook and low churn. Institutions prefer Bitcoin's 1.8% to 8% 30-day volatility to avoid fiat currency devaluation and systemic instability. The Bitcoin ecosystem evolves through old and new player interactions. Institutional diamond hands are buying retail tourists, BTC panic sales because of its long-term value as a digitally scarce, politically neutral currency. Institutional demand stabilizes Bitcoin's price floor and may accelerate its decoupling from risk assets. Alden predicted a shift from speculative chaos to structured capital flows, where CFOs, fund managers, and sovereign wealth funds view Bitcoin as currency and idealists. Bitcoin's credibility as a hedge against a dollar-centric global system is strengthened by institutional participation, which reduces volatility. By linking Bitcoin to traditional finance, ETFs institutionalize decentralization. Bitcoin is moving from speculative, retail-driven to a robust, durable market that may make it more than digital gold and a foundation of the future global monetary framework. After another macroeconomic upheaval, the key question is whether Bitcoin has proven itself as a hedge against dollar weakness and global instability, or is it still subject to traditional markets? Institutional capital's gradual identity changes to Bitcoin may work. Thanks for watching.